Hi, I'm Grant Stephen.
And I'm Kris Bernier.
And we're the two investment guys. This week, Kris and I want to continue our discussion around market dynamics. And if we look at the market returns from around the world, we'll start with Toronto. It's up about 2% so far this year. On the other hand, we've got the Dow up almost 11% so far. Looking to Europe, we got London up 7%. Paris and Germany are both up about 3%. And when we look to the Asian markets, Kris, we've got Hong Kong down about 1%. Meanwhile, Tokyo is up 20% so far this year. That's sort of yen related or yen currency related. So when we look at markets where they're at the moment, they look like they're consolidating, just sort of trading sideways here, up a couple days, down a couple days sort of thing. You know, Kris, when we look at the news in Europe, it's negative still, and everyone goes, yeah, that's because they're in a deep recession and it'll be a long, protracted thing. But, you know, the latest country to hit the news wire is Cyprus. So why don't we touch on that?
Sure. Well, we always talked about why Greece matters now. Why does Cyprus matter? Well, it's really not because of the size of Cyprus for sure. It has to do with the resolution that has come about in terms of their banking crisis. And as it turns out, it looks like depositors that have assets over 100,000 euros, therefore not insured by the banking system, are going to take a haircut along with bondholders and common equity holders and so on. And they're going to go through a similar process that the U.S. went through in terms of their banking crisis.
Right. And you know, Kris, so the Euro chatter immediately turns to, well, who's next and who this might happen to which country and all that kind of stuff. And so immediately the sentiment turns negative and equity markets roll over, at least over there. You know, when we turn to fund flows, which is something you and I watch very closely, we've talked about this before, which is really us just measuring how much money is sloshing around in the market and where it's going. We've talked a little bit about you know, a subtle shift from the fixed income or bonds into equities, but it's interesting that, you know, long after the markets have moved up, say roughly 10%, then equity investors decide to come back in, and we've seen it time and time again in history. Just interesting to note that that's happening now, and we haven't seen that significant bond event that's really caused that money to flow into equities just yet.
That's right, and if we look at the mutual fund inflows year to date, there's an equal amount that's gone into both equity mutual funds and fixed income mutual funds. So as you say, we haven't seen that rotation away. One thing that hasn't changed, Grant, is the yield story. You know, that remains intact. Investors across the country and throughout North America continue to look for yield in this low interest rate environment. People that are relying on that income to fund their retirement, and that story hasn't changed. And if we go back through the last 50 years, dividend-paying stocks and dividend growers have continued to outperform.
Yeah, it's been a story that you and I have talked about many times. Yield will be a significant portion of return again this year for investors, so we want you to keep that in mind.
I want to thank you again for your questions and comments. Please keep them coming. You can contact Grant and I at twoinvestmentguys.com.
Join us next time. We're going to continue our discussion around market dynamics. So until then, I'm Grant.
And I'm Kris.
And we're the two investment guys.